Good morning. It's Vijay here. Today is Sunday, 22nd December 2024. Welcome to yet another episode of Weekend Market Mirror, where we discuss what happened in the following and the past few weeks, including last week, and what is likely to happen in the future going into New Year. Incidentally, this is the fourth time I'm restarting this podcast because of some problems. It is something similar to what the Bulls underwent in the last 3.5 months. They were always strong, they always bought back and fought back against the Bears till around end of September 26th, and then they took it up to 26,000 plus, and then they lost their mojo. Subsequent to that, every time the Bulls have tried to take up the market, the Bears have come stronger. So today, if you look at it, the scenario is that almost everyone is bearish. So it is almost like we have reached a situation where in the Indian markets at least are in a make or break situation. The US markets are much better off. Even among the Indian markets, the micro caps and the small caps are much better off. Mainly the issue is in the large caps and to some extent in the mid caps. So today we have had so many events in the last 1 week, which has now come to question the bulls whether they have the strength to take it up next week and thereafter, or they are going to give up, as most analysts are talking about. On my timeline, for instance, all the analysts I follow are talking of lower levels in the coming weeks. Maybe they are expecting a rally for next 2 days at best, and then into the new year they are expecting significant low numbers as much as 21,200. Here, let us examine as to what exactly is the truth. The one is the bullish argument, one is the bearish argument, and one is the data argument. So let us go back and see what is the data argument. Now, I will take a step back and let's look at what Lenin said many years ago. There are decades when nothing happens, and there are weeks when decades happen. That's what seems to have happened as far as Indian stock markets are concerned. For last 3 and odd years, from March 2020, we have been going up steadily. Of course, we had a drop in 2021, but that was quickly bought into in many stocks. And the so-called bear market did not last more than for 3 to 6 months overall. For instance, in the large caps, it lasted between October 2021 to June of 2022. In case of Bank Nifty, it lasted between October 21 to March of 2022. In case of the broader market, it lasted between January and June of 2022. So net about 6 to 8 months. It normally bear markets in India last for about 12 to 14 months. So it was a very shortened bear market. Damage was done, but mainly in the broader market. But by and large, the let's say a bull escaped unscathed because even the Nifty fell only 18%. Now, the Nifty has not fallen 18%, it's fallen about 12% at worst. But the scars are bigger because the positions are bigger and the prices are higher. Between 21 to 24, the prices are higher. That time it was 18,600. Today we're talking of 26,000. So any drop and with volume, the scars become deeper. So last few weeks, for instance, after Trump coming back, the US markets have really taken off, whereas Indian markets have done nothing in spite of some dollops of good news here and there. Now, last week, for instance, there was a scare in the US market that there will be a shutdown in the government. Now, generally, government shutdowns have worked well in favor of bulls. It is not that something bad has happened. However, there was a general fear that something bad will happen this time around, especially because you've got an interim administration before Trump takes over. So therefore, we had a lot of nervousness going into Friday. In fact, Dow Jones had fallen 12 out of the 13 days in succession. 11 days, I think it fell down, which was last seen in 1974. So something unprecedented happened in the last 10, 12 days in the US as far as Dow Jones was concerned. Now, on Friday, the markets were very scared, and so it opened lower and then they bounced back. Now, what happened was the government averted a shutdown, and they've been continuously going, and going close to the shutdown time and then doing some adjustments and pushing it further. Now they have pushed it to March when the new season, when the new president comes into play, comes into power. So Friday was also what you call it triple witching, which is the seasonality and December rallies. Now triple witching is a time when in the every quarter on the third Friday you have closure of the three contracts, which is Nifty options, stock options, and so not Nifty, sorry, this one index options, stock options, and index futures in the US. I'm talking of. So every Friday, third Friday, generally there is some volatility, and so much so on the quarterly expiration, the volatility is high. The outstanding positions were extraordinarily high. It was a record outstanding positions, but the markets did come down off the highs, but they closed significantly higher. So that is over. Now we are looking at what the seasonality. The seasonality is the Santa Claus rally, which people talk of, which happens end of December. So this is what triple witching hour is in the last 60 minutes of the trading day on the third Friday, March, and June, and September, and December, when contracts expire simultaneously. So now we have to await for Santa Claus rally. Now Santa Claus rally is defined as a rally which happens somewhere after the 25th December. 24th December is a half day for US markets, and 25th, of course, is a holiday. Then the following 3-4 days is when the Santa Claus rally takes place, which goes into the January 1st week. Now, here what we have, we went into the weekend with heavy selling. The technicals showed that the market, even though it was oversold, became more oversold, and Nifty and Bank Nifty broke the 20 EMA. So all the analysts, whether you talk of Elliott Wave analysts or the GAN analysts or any kind of analysts or even the fundamental guys, are all now on the bearish side. So it was, it is normal for them to be bearish because it has broken some important indicators or important moving averages, or the fundamentals have not improved. And going to the week, we also had this GST meeting. This is an old cartoon where, this is Arun Jaitley presenting the four stages of GST, or four levels where they will get taxed. And there was a fear in the market that there will be a new fifth level, which is 35%. If you observe, all the media covered something like there will be a 35%. It will be called a sin tax, and that will be put on stocks like cigarettes and SUVs, and even the cars, the entry level cars will be charged higher. So we went into the GST with that. So what did we get out of the GST? None of the things which we feared, that we did not get. And some of the things which we expected, which was insurance. On insurance, they wanted to reduce the GST. There was an expectation that did not happen. So what we got, cheaper items were fortified rice kernels, which may not make much difference, black pepper and raisins, which is again very minor, and ACC blocks on 50% by fly ash, that is also minor. The other thing was gene therapy, they have exempted from GST, which is good. Penal charges by banks, NBFCs exempt from GST, that is also very good. And ATF excluded from GST, that's good. Airline turbine fuel. And deferred, what they deferred was tax rate cuts on life and health and food delivery platform, which was again a fear that Zomato and Swiggy may get affected. So what were the dearer items? They put used EVs from 12%, they jacked it up to 18% GST on margin value. It's only for the business sales. Somehow people have got to understand that if you are going to sell a second-hand car, then you will have to pay GST. It is not so. It's only for business sales. I would, as an example, state Car Trade. For instance, there is a company called Car Trade which is listed. They were paying 12% GST because they were in the business of buying and selling used cars. Or even Maruti, for instance, has got some used car. There are many car companies which have used car, business. Those businesses will get affected. Now, how much, we don't know, but it will get affected, especially in Car Trade. They only do the second-hand purchase and sale. So pre-packaged spice and spice popcorn, there was a big issue on that. That is only a technical issue. I don't know why there was such an issue made out of it. And please note that if the GST Council has done something, people are blaming the finance minister only. Now, why I don't think she's a great finance minister, because the way she answers questions, that is her, let's say, her persona. But the GST Council consists of people from all parties. You take the NDA parties, the center has got only about 33% vote. Then you got NDA governments. Then you have got the non-India governments. There are at least 10 non-India governments which are represented in the GST Council. But none of those opposition parties stood up and said, okay, we will do this or should not do this. So now the blame, unfortunately, falls on the finance minister because she is the captain of the ship. Now, why I'm trying to tell you this is basically because, you see, GST Council it is not finance ministry or not finance minister. So one has to take that in perspective. So I look at this GST Council meeting something as a very good thing which has happened, because no bad things have happened. In 2022 February, there was huge fear that Nirmala Sitharaman in the finance bill, which is the budget of 2022, there will be huge taxes. Nothing came. Nothing good came, nothing bad came, and the market took off. I think it went up about 16% in 10 days. Now, this week is also a time when the Reliance has hit a new low. And next week, that is this coming week on 28th December, is his Dhirubhai Ambani's birthday. Normally, some big things are announced on the birthday. So you can expect something good to come. If, for instance, it doesn't happen, then God help us. So therefore, this week, in my opinion, is a very, very crucial week in terms of events. Now, just let's look at what is the December phenomena for us. See, on Friday, for instance, Nifty fell 660 points. If you go back in December 20th of 2023, Nifty had fallen 560 points. After that, it took off. Then if you go back to December 2022, Nifty fell 270 points and then it took off. Then if you go to December 21, Nifty fell 575 points, it took off. 2020, 645 points, it took off. So if you keep looking at various levels, December 20, December 18, and then in December 17. So all this time in December, you will get some big move downwards. So therefore, this downward move is expected. It is not that something that has not happened before or something like that. But the fear is there. The fear is that something big has happened, and therefore the market has to come down and collapse. Now let's take the 200 EMA, for instance. Just look at 200 EMA. Just show you the 200 EMA. Yeah, here we are. Let's take this. Oh shucks. This is the problem. I always have this problem. Let's take this 200 EMA and what is this? Yeah, here we are. This is the last one, is the 200 EMA. Now, yesterday it has broken the 200 EMA. So everybody jumping and saying it's gone. It also broke on November 19th. And then you see what happened. After that, there was a big rally of more than 1,500 points. It has broken in the past many times. You see here, it's broken in 2022 for a few days, and then it took off. It broke this was the bear market. It broke for a few weeks actually, and then it took off. So every time 200 EMA breaks, it doesn't mean we are in a bear market. In fact, on the other hand, if 200 EMA breaks, if you go and buy, then invariably you end up making money. Now, people will argue saying that, okay, in a bull market, 200 EMA will break, but we are in the beginning of a bear market. So let us give it to the bears, saying, okay, we are in a bear market. Okay. So what is a bear market? At least 20% drop in the indices. So when was the last real bear market? That is the time when even Nifty did not fall 20%, it fell 18%. But we had Bank Nifty falling 20%. So, okay, it classifies as a bear market. And the small cap and mid cap and all fell more than 20%. So it's a bear market. Okay, this was in 2021 when we reached about 18,604 was the peak. Then it started coming down, just like what is happening now. Okay, then what happened? On December 20th, it fell down 575 points. So we are now getting into what we call a bear market. Then what happened? From there, it took off and went up all the way up to Pongal. That is, it went up to 18,321. From a level of 16,410, it went to 18,400. That is 2,000 points. That is nearly 15%. It went up. So even in a bear market, assuming this is a bear market, even in a bear market, you are seeing a significant rise in the last week of December up to Pongal. That is why I've been talking about buy Deepavali, sell Pongal. You may have some tough time in December also, but by and large, by Pongal, 80% of the time, things turn out to be good. So therefore, what I am thinking is that the market should bounce back from here. Now, this bounce back maybe, I'm just guessing, it could be something like what happened in August, for instance. If you take August, for instance, continuously market was coming down because of the yen carry trade in Japan. So from around 25,078, it fell down in the first few days to around 23,893, and then it did not bounce back enough. But on August 16th, it took off. But before that, it created quite a bit of havoc and volatility on August 16th. It did not break it only broke the first hour low at around 12 o'clock, and only then it strengthened and then it took off. So what I am expecting for Monday, which I will talk in detail tomorrow, is that we may have some volatility in the beginning because the bears are still strong. They're not weak. So even if it opens with a gap, you may, not necessarily you will, you may see a drop down. And if the drop down does not cross the first hour high, then we are in a completely different environment. Then the bears win hands down. However, if the first hour high is broken somewhere during the session, then one can look towards bullish. Seasonality is very bullish. If you look at what happened on Friday, it is very bearish. Sentiment is very bearish. So I am not able to, visualize that we will get into some bearish trend beginning tomorrow. On the other hand, I won't be surprised that the US market, incidentally, the US market shutdown averting of the shutdown came after the market close. So I'm expecting US markets to do well. I'm also expecting Japan to do well because Japan did not raise interest rates. I think because it's oversold, there will be something happening in India. But I also think because of seasonality, that will not happen only for 1 or 2 days. It will continue for the next 15 days. And we have events like Dhirubhai Ambani's birthday, where something good should happen. So therefore, net, I go into the market based on data, based on history, and based on sentiment. So this tells me that we should be going bullish next week. And if it breaks and starts going lower and breaks the previous low, which we saw sometime on 22nd November, which is 23,350, then we are surely in a bear market. But till then, the jury is out. I am bullish. I continue to be bullish. And I continue to be hopeful that the 23,350, which most people are expecting, will not come. But whatever you do, I hope it is successful. Thank you. Have a nice Sunday.